Are we seeing the signs of a stock market crash? Now, this is the stock market news today, so we're going to be talking about that, along with the tech rebound, worrying being at an all-time high, the Dodd-Frank bill, are we in a bubble, video game stocks, the stocks of the day, so biggest winners and biggest losers of today. So anyways, let us get started. So remember on Friday, stocks were down 4%, all the tech stocks were down 4%. That was a terrible day for tech. On Monday, they were all down again, 1 or 2%, some of which were even bigger losers. And I was talking about yesterday how this trend probably won't continue, but it might. And so what happened today? Well, the rebound happened. No, there's no tech crash coming this week, apparently, as all of the tech stocks rebounded. Actually, the average tech stock in the S&P 500 was up 1% today. Now, there's still 1 hour left in trading. I record these at around 3 o'clock, 3:30, 4 o'clock. And so we're going to cover those today. So let's start off with the FANG stocks. Remember, Facebook, Amazon, Apple, Netflix, Google. I've been talking about them a lot this week. And so what happened to them today? Well, as I said, Facebook currently up about 1.5%. Amazon up about 1.2%. They were all getting killed on Friday and Monday, by the way. So they're up. Amazon's up, $11, 1.2%. Apple's up roughly 0.6%. I think did they have a bad day yesterday? I think they had they had a good day yesterday, I think. I completely forget. Netflix finally up. They had the worst out of the last 2 trading days. They had the worst. They're up almost 1% today. Google up 1%. So those are the FANG stocks. They have all rebounded. There's no immediate collapse. If the tech stocks were... Now, here's the thing. Tech stocks are overvalued. I'm going to get to that later in this video. However, I don't expect a dramatic drop-off like we were seeing on Friday and Monday. I thought that maybe this trend could continue. Maybe they can keep going down gradually over time. But how things are going on Friday and Monday, I didn't think that we were going to see an immediate drop-down. I thought it would be an overtime, maybe over a few weeks. So we're going to see what happens. I'll keep you guys updated on what happens to the tech sector. However, as of today, the tech slide of the last 2 trading days is over. So the worst 2 tech days back-to-back we've had in years, that's over. Now, why? I don't even know why I want to talk. We're going to get to one of the stocks of the day. I'm going to save this to the very end here because they've been pissing me off in a good way over the past few days. So we're going to leave that to the end here. So the next thing I want to talk about, so we talked about the tech rebound. We're going to talk about worrying being at an all-time high. So I was seeing this article come out. So they surveyed a few thousand investors. This was from one of the banks in the United States. They surveyed a few thousand of their investors. And here's what they found was that 44% of investors think that the stock market as a whole is overvalued. And 84% said that the tech sector was overvalued. So what does this mean? It means that people are a little bit worried. They're a little bit wary. And they followed up with a few other statistics here. So 73% of hedge fund managers that they surveyed said that they are invested in long-term equities, meaning that these hedge fund managers are expecting that the stock market is going to go down in the next 3 to 5 years. So they're long-term, meaning that 5+ years is usually what they mean by long-term. So hedge funds are putting their money into long-term stuff because they think that we're at the end of this economic growth cycle. So take with that what you will. Actually, funny enough, is that 73% are in long-term equities. I don't know if you guys know this, but I've mentioned this a bunch of times, especially in my stock market for beginners video. I always say the 80-20 rule. And so the hedge fund managers, apparently they have a 73-27 rule. So the 80-20 rule that I have is put 80% of your money in long-term stocks that you're going to hold on to for 5+ years. And then, 20% you just go and throw out into stocks that, might go up. 20% of your money goes into more speculative stuff, so tech. Tech is usually what I say, but you can also do it in commodities, you can do it in Bitcoin, stuff that doesn't pay you a dividend most of the time, and you're just hoping that the money will go up substantially. And so that's what hedge funds are doing right now. They're having a really similar strategy to me, which is kind of cool for me. But I don't know what that means for you guys. A lot of you guys might be 50-50. I know a lot of traders out there, some on YouTube are like 80-20. They're reverse 80-20. They're 20-80. So 20% in safe stuff, 80% in speculative stuff. So take of that what you will. So what this article also said was that usually what happens when big investors are a little bit wary of the stock market, they put money more into guaranteed returns, into stuff like bonds specifically. And so what they saw was that $16 billion, an additional $16 billion was put into bonds last week alone, and $1.3 billion was taken out of the stock market. According to this one survey of a few thousand investors, or not a few thousand, this was a bank. So this was just whoever invests, I think it was the Bank of America, right? So I guess that they took data that they saw through people who invest through them. So this is just through them, by the way, Bank of America. So they saw that 1.3 million people took their money out of the stock, $1.3 billion was taken out of the stock market through them, and 16 billion was put into bonds. So take with that what you will. That isn't really too much of a big sign for me. Personally. However, we're going to get to some more signs here about worrying and what that means for potential stock market crash coming. And I'll give you some surprising stuff. You guys know that I've expected a stock market crash to happen in roughly by the end of next year. Maybe not this year, but by the end of next year. That was my original prediction. Now there's some information I looked at today. Might change my opinion on that a little bit here. So we're going to talk about deregulation. So I talked about that a little bit in the last two videos, I believe, the Dodd-Frank bill, how Trump is pretty much planning on deregulating the financial industry. So what Dodd-Frank was, I'll just go over it quickly. I won't bore you guys because I talked about this on Monday, was that the Dodd-Frank bill was financial restrictions that were put in place after the last stock market crash and real estate bubble that happened through 2008. The bill was implemented in 2010, right after it all happened, to make sure that this didn't happen again. And Trump wants to deregulate it again. So it means two things. One was that it's good for financial institutions because they're going to be deregulated, be able to do more with their money. It also means that we could see a crash coming relatively soon after this is implemented. So what I wanted to talk about that additionally today was that we got some commentary from it. Not just me, but we got it from senators too. And so there was a comment here from Democratic senator. So they're Democrats, so take that what you will. They're going to rip on Trump no matter what. So what she's saying is that it's going to make it, the specific changes, she went over them, it's going to make it a lot easier for big banks to cheat their customers and spark another financial meltdown. That's what I was thinking yesterday too, but she's thinking the exact same thing. And so the changes proposed were I'll read this out. This is from an article specifically from CNBC. This part was that changes proposed by the Treasury Department include easing up on restrictions big banks now face in their trading operations because of Dodd-Frank, lightening the annual stress tests that they undergo because of Dodd-Frank, and reducing the powers of the Consumer Financial Protection Bureau. And I talked about that a little bit yesterday, the Consumer Financial Protection Act, which has been aggressively pursuing bad behavior of financial institutions and trying to correct them. So they want to roll all that back. I mentioned before how essentially what the Dodd-Frank was to have a government oversight over all these big financial institutions. And so I officially got the more specifics of that. So who is this going to benefit for the stocks in the short term if this goes through the government? It's going to benefit JP Morgan, Bank of America, Citigroup, Wells Fargo, Goldman Sachs, Morgan Stanley, a lot of those big financial institutions that we saw rise from 2005 to 2007. Those are the ones that are going to benefit again from this. But we knew what happened after those dramatic rises. They all fell 80%, like essentially in 1 month in the stock market. So I just want you guys to be wary that they may see some growth over the next year and a half if the stock market doesn't crash before then. So maybe you guys invest in that. Maybe you guys don't. Take that, what you will if this deregulation happens. So we're going to move on here to some other interesting stuff here. I'm going to throw this up on the screen here about this VIX chart. So I didn't explain this actually in the last two stock market news update videos. So what the VIX chart is that it talks about the predicted volatility of the market over the next 30 days. That's what it is. It's really a lot more complex than that, but that is how I could break it down into one sentence. But pretty much it's in what investors think the volatility of the market will be over the next 30 days. That's what it is. And so despite all of this worrying, all of this panic and so on, what this index shows is that predicted volatility is at near an all-time low. Near an all-time low. So what does this mean? I'm going to break it down for you. There should be a picture coming up on the screen right now. So what happens when this VIX chart, when this predicted volatility index is at a low? That isn't when a crash happens. It's when the bubble forms, which is quite interesting. So, from 1990, 1991, the VIX dipped below 20 for the first time in a while, and it stayed low up until 1995, 96, and we know what happened from 1993 to 1999, 2000, 2001. So the bubble formed, and then the dot-com crash happened. And so what happens during a crash is the index spikes up. And so as we can see here, 1997, 98, right when the crash started happening, 98, volatility jumped up. In 99, it happened again, right? The volatility just completely, predicted volatility jumped up. And now, I'm not 100% saying that this is a predictor of a crash or a bubble or anything, because there was the period from 2000 to 2003 when volatility was still high. I guess recovering from the dot-com bubble is what my impression of that is. And so when this started getting low again in 2003, the volatility, predicted volatility, 2003, 2004, 2005, 2006, that's when the real estate bubble and the next stock market big bubble started forming. So 2005, 2006, 2007, predicted volatility was at an all-time low in 2007. Take that in. Predicted volatility was at an all-time low in 2007. So they rank this on a chart from essentially 0 to the all-time high was about 80 for volatility. Just random numbers, okay? I'm not going to break that down for you. And so it hit 10 in 2007. 10 was the all-time low for this one, or second all-time low for this chart. The all-time low was in 1995, I believe. And so it hit an all-time low in 2007. So no one was expecting the crash to happen in 2007. That's what the chart means. Now what happened, essentially within the span of a couple months here, it spiked up to about 30, from 10 to 30, and then in 2008, right after the crash started happening, it went from essentially 30 to 80. And so what this means is that when it's at a low, that's when the bubble's forming, and that's when the crash starts to happen. And the market gets really volatile, and the predicted volatility just spikes when the crash is already happening. And so right now, as you can see, volatility's been going down and down and down and down over the past 5 or so years, and it's at low right now. I think let me check right now what it's at. So we're going to check the VIX price. I believe it's at 10 right this very second here. Sorry, just give me 1 second. It's at 10. Okay, so it's near the all-time low, meaning that either, based on history, the bubble's either forming or it's about to burst. And I think that it's actually more towards the forming side at this current second. I don't think that the bubble's bursting right now. But here, we're going to go over the signs of the stock market crash, what this video is about. So I've given you worrying is at a high. That doesn't really mean too much because people worry all the time about the stock market. Unless after the crash, people don't worry. But we're going to ignore that. Worrying is at a relative high. There's deregulation coming for the financial sector specifically. So that's coming. They have a majority government. It's going to go through. 80% is going to be through their it's like 80-20. 20% goes through legislation, 80% gets voted on or something like that. So there's deregulation coming. We talked about the VIX. Debt is at an all-time high. That's the other thing I wanted to talk about. Debt is at an all-time high, just not in the stock market. We're talking in real estate. Well, real estate's at a second all-time high. It was higher in 2006, 2007. Debt's at an all-time high. For credit cards, it's at an all-time high. For auto loans, it's at an all-time high. Student loans, all-time high. People are paying proportionally more in debt for those things than they have ever before, and there's more people paying those debts than ever before. So that's what's making me nervous, is that it's not going to be in real estate, I don't think, this time. It might be in Canada. But if the crash is coming, it's not going to happen in real estate this time. It's going to be happening in those sectors, I think, where people aren't going to be able to pay back those debts, and it's going to hit the financial institutions once again if this financial deregulation goes through, and the high debt. So we got that. We have high debt at an all-time high. We have flow of stocks to bonds. That's usually a sign, but I don't really take that into account because that happens all the time. That happened in 2015 where there was a big move from stocks to bonds. So don't worry about that. Overvalued stocks. Speculation is probably the number one sign of a stock market crash specifically. So when stocks are speculated for, especially over the course of many years, of three or more years, that's when we see a stock market crash specifically. And what have we seen since 2015 or 2011 specifically? Everything's been going up pretty dramatically too. We're talking 10% returns per year since then. So overvalued stocks, especially in tech right now too. I mean, tech is in some areas are valued 2 or 3 times higher than they should be. Maybe not 2 or 3 times, maybe like 50% higher. So tech speculation is at an all-time high. We're at the big sign for me is that we're at the end of the economic cycle. So throughout history, there's been a recession every 4 to 10 years, with no exceptions, going back hundreds of years. 4 to 10 years, there's been a recession. Now, there's never been a period of economic growth of more than 10 years, and we're in year 9. Think about it. Crash happened in 2008. We're in 2017 right now. We're in year 9, so there should be a crash happening or some sort of recession, whether it's minor like in late 1990s, the dot-com crash that hurt the stock market, but the economy was fine as a whole. So whether there is a big giant crash like in 2008 or a little one in the 2000s and the 9/11 era, I don't really know. But we should be at the end of this economic growth cycle. So that's what's the biggest sign for me, is just the time period. And now also interesting too is that I was looking at this housing chart here. And so usually a sign of a crash is when housing prices rise, fairly rapidly over the course of several years. And so we saw this in this is the wrong chart here. There we go. We saw this in 1982 to 87 when the stock market crashed. We saw housing prices rise a fair amount. We saw that then, but there wasn't a real estate collapse. But usually what I'm trying to say here is that there's usually high periods of debt right before a crash. And so when the housing prices go up, it's usually a sign of people taking on more debt to buy houses, a lot more demand, a lot less supply than normal. And so we saw housing prices go down from 1988 to 1996, and then they started going up 1996, 1997, 1998, and then they took a little bit of a dip, and then they rose dramatically from 2000 to 2007. Again, a big dip in 2008. And now from 2011 to today, housing prices have been going up pretty drastically. So again, that's a sign of just higher debt. It's not a sign of the real estate market or anything like that. It's just a sign for me. People are taking on more debt now more than ever. And so those are some of the signs that a crash, it might not be coming even in the next year and a half. Looking into this a little bit more, it may have changed my mind. It may have pushed it back to 3 years for me, 2 to 3 years. Looking at this stuff, but I'm going to stick with my original prediction. We'll give it a year and a half, and we'll see if I'm wrong or not. We'll see if I'm wrong. Expecting by the end of next year, there should be some sort of correction happening. There was worrying the last 2 days that it could be happening sooner rather than later, but we don't really know. So anyways, we're going to move on to the next topic here. Those are the signs of the stock market crash. We're going to move on here. So moving on to the stock market today. So we talked about the tech sector, but I want to talk more specifically about video game stocks because they have been really, really hot. I knew that EA, Electronic Arts, one of the giant video game companies of the world, I know that that's been a very good stock for the past 5 years. However, I didn't realize that there was more companies like that have been fantastic over the past 5 years. Plus, they've had really, really good days today, which is why I'm talking about it. And so we're going to move on to this stock called Take-Two. Does anyone know what Take-Two, who the company is? I've heard of this before today, but I didn't realize what company it was until I looked into it today. So Take-Two, you might know them as Rockstar Games and 2K Games. That's who they own. They own those two giant companies. And this stock is up 1% today. A lot of the video game stocks are up recently because of E3. The E3 convention, all the big video game companies are there presenting their games for the next year and a half. And so Take-Two Games, they own Rockstar and 2K Games, meaning that the games that this company has pumped out have been like near they've been $100 million games, hundreds of millions of dollars per game for some of these. So we're talking Grand Theft Auto, massive game. I don't know if that surpassed $1 billion, probably not, but maybe 400 million, 500, might have passed $1 billion for all I know. But they own Grand Theft Auto, BioShock series, the NBA 2K series, the WWE 2K series, Civilization, one of my favorite games. They own that entire series. Red Dead Redemption, Mafia, Battleborn, Borderlands, XCOM, and the list goes on and on and on. And this is one stock. And so while I'm actually taking a look at video game stocks for myself, I don't know if I'm going to invest in them or not. You can check out my program to see if I actually do. I'll be posting what I invest in on there in the link below. My stock market program, that's an updated program. So why I'm actually taking a look at these though is that because of the habits of gamers. And the habits of gamers is video game industry has been taking off, and it's going to continue to take off. And like an example for me, I got hooked on video games when I was probably 5 years old, and I probably peaked my video game playing in high school / a little bit of the university, although I was busy, so probably high school. And it's one of those industries where it is a growing industry because all of their old customers they retain in some sort of way for the most part. I mean, I still occasionally play video games. I'll still occasionally buy games even though I'm not like a gamer anymore. I just still like playing video games once in a while. And that's why I like that industry at this very second. Now, however, a lot of those stocks are really, really high right now, but I'm talking about over the next 5 or 10 years, I think that most of those companies should still go up over time. I mean, they've been so consistent over the past decade or so, for the most part, that I wouldn't be too worried about them. I would be worried about them for the next 2 or 3 years, 4, 5, 6 years, but over the next decade, I wouldn't be worried about them, is what I'm trying to say here. I could be wrong. That's just my opinion. So Take-Two is up 1% today. EA is up 0.75% today. Again, we have an hour left of trading. Less than an hour, actually, right now. We have about 30 minutes. So EA's up. Actually, EA's up 1% today. Nintendo's up 0.5% today, so good for them. Actually, funny enough, you want to know something funny, is that I was taking a look at Nintendo stock as a whole, and funny enough, Nintendo pays the dividend, by the way. Nintendo stock pays a 1.25% dividend, 1.26% on the last one. But I was taking a look at their stock during 2006, 2007, and man, they were one of those companies there. The value of their company got absolutely crushed over the past, I don't know, over the 2007 to 2010, I mean, in 2012. The value of their company, just perspective here, if you bought the stock in 2007, November 2007, and you held on to it and sold it in 2013, you would have had a loss of almost 90%. 90% of their market cap went away. Luckily they managed to make it as a company. I mean, if you lose 90% of your value, that usually kills most companies. But companies like Nintendo, eBay, and Amazon, and from the .com crash, they survived a 90% drop. So man, now Nintendo's been around for over 100 years. They're actually, I think that they're their oldest company that's publicly traded right now. Maybe Hudson Bay might be older, but they're one of the oldest companies in the world, actually, Nintendo. They were actually a trading card company that moved into video games, funny enough. So I wanted to talk about them. I wanted to talk about Activision. Activision has made some very good and some very hated games. They've made Call of Duty Black Ops, StarCraft, Blur, Skylanders, Tony Hawk series. They made some of those games. So they made some pretty popular games, Activision, Blizzard. Obviously, if it's Blizzard, I'm guessing they obviously did World of Warcraft, right? So they've had some giant games. Yeah, it says Blizzard. So they did Quake. They've done Heroes of the Storm. It's all one publicly traded company. And I actually didn't know that they were publicly traded until today, which is quite interesting. So they're up 2% today, or 1.5% today. So they've had a good day. Activision, Blizzard, all the video game stocks are doing very, very well today. So if you've invested in them, good job. I mean, they've done pretty well since the drop on Friday. Now, I think that's going to kind of wrap it up for the video game talk. Now, I just want to move on to the overall stocks of the day. So I'm gonna try to make a segment, maybe once in a while, maybe every day, maybe not, about the biggest winners and losers in my mind of that day. Not necessarily the biggest winners and losers, period, but the ones that are fairly common to most people. So we're going to talk about some of the biggest winners today. I think we're going to go on to Mattel. I want to talk about Mattel today. So Currently, they're up about 2%. Mattel is a toy company. So a toy company that pays a massive dividend, by the way. So that's why I actually think that they're interesting. They've been down over the past 5 years or so, so I'm not going to buy them under any circumstances. But they do pay a nice dividend of 6.69%, which is extremely, extremely high. But the reason why they're paying a high dividend is because they know that they're not a popular company to trade right now. So they've had a good day, up about 2% actually right now, 1.89%, 1.9%. I want to talk about NVIDIA, that hot stock that everyone's been loving the past 3 months. They actually were one of the bad tech stocks today. So they're actually, no. The funny enough is in the past 30 minutes, they took a giant jump here. So what do I know? They're a winner. I was going to say that they were a loser, but since I started filming this video, they've taken a jump from minus 1% to plus 1%. So they're winners today. Good for them for having a good day. Now, I wanted to talk about this, was that, yeah, they had a giant drop from Monday and Friday. They dropped about 7%. But in the past, if you invested in them on May 9th, right before the stock jumped up, you would have a 47% return, which is absolutely ridiculous, NVIDIA. So I don't know if that's speculation. I don't know if they had giant earnings. I actually think that they did. I remember looking into this a little while ago. They had decent earnings, but I still think that stock is overvalued as hell right now. NVIDIA, I talked about Mattel. Big loser today, unless the stock has changed in the last 20 minutes. A loser today was 21st Century Fox. A company that you don't normally think about trading. They're a company that pays a 1.2% dividend. Yeah, they're really bad today. They're down 2.5%, which is almost $500 million in market cap today in evaluation. So they're actually a stock that I wouldn't look at them because I don't like that they've been around so long and that they've been a cyclical company over the past couple decades. But 21st Century Fox, they've lost about 2.5% today. That sucks for them, so they're a big loser today. We've talked about Take-Two and EA. So I think that's all the biggest winners and losers I want to talk about today, except for, I think I'm missing one. And this stock is the bane of my existence. So we'll see if, I just want to wait. I'm hopefully update this, see if the stock has changed in the past 20 minutes or so. But this one is the bane of my existence right now. Oh, fucking it went up even more. Okay. So if you've heard me talk about this, it's the anti-stock that I can't invest in because I know once I do buy it, it's going to go down. Tesla up 5% today for no good reason. I don't know. I don't know why. I wish I could know why. I don't. They're still losing money. They had bigger losses than was projected this year in terms of net losses. They're up 5%. There was no news about them. There's no earnings reports coming out. They're in more debt today and have a bigger loss today than they did yesterday, and they're up 5%. So I don't know. They're the ones that, see, the reason why I talk about them, I love the company, I love what they're doing, I love Elon Musk. He's one of my favorite people to read about, even though he's secretly actually a dick, but he's a smart dick that's good for humanity. But like, the thing about Tesla is that I had the opportunity to invest in them, and I was seriously, it was a toss-up. They were $150 a few years ago, and I decided to go the safe route. Now the safe route still ended up getting me good returns, really good returns. Just Tesla, man, it's the one that got away. It's the one that got away, and I just can't. I can't buy them. They're so overvalued right now, but I love the company, and why do you do this to me, investors? This is the one that I was really wrong about. That I didn't think that they'd go up 150% in 4 years, or 3 years, whatever they... So anyways, they're a highly speculative stock that I'm staying away from right now because I don't even know why. I think that they're going to be a great company going into the future too. It's just they shouldn't be going up 5% on a daily basis, and they shouldn't be going up 70% when they have major losses. It shouldn't happen. So those are the stocks of the day. I think that's going to wrap this video up. Hopefully you guys liked it. So this is Stock Market News today. By the way, I really liked that. Hopefully that you guys like this video from what I've seen. everyone's, from the statistics on the stock market news today videos, everyone's really liked them and watched a lot of them. Really, people have liked them. Now, it's not normally my normal like entrepreneurship talk, but I'm still uploading those as you guys can tell. So I'm doing 2 a days, and I want you guys to know I'm putting in a lot of work right now. I'm going to be uploading even more content, even more business news content, not just stock market stuff, business news content coming out in the near future. I don't know if you guys are going to like that. It's going to be slightly political, but at least I'll get some more of my own content out on there, and hopefully you guys like it. Maybe you guys don't. We'll see what happens. So anyways, thank you very much for watching. If you guys want to know more about the stock market, make sure to check out my stock market program in the link below. So you're going to get a stock market program, which takes you from, not knowing anything about the stock market to being a safe trader and get you investing, getting those nice returns every year. So it takes you from that to making your first or second trade, and then maybe over time you can develop your own strategy. That's what the course is about. Taking you from not knowing anything to actually making your first few trades. And what you're also going to get included in that is me actually giving you updates about like my portfolio, how much I'm investing, how much in certain stocks I'm investing in, why I'm looking at some stocks, and so on. So if you guys are interested in all that, you can get that, and I call it the VIP program, the updated content, which is included now in the stock market program. So anyways, take a look, links in the description below. I'd like to thank you very much for watching. You're all very beautiful people, and I'll see you guys in the next video.